Unless you've been living under a rock, the biggest story of this week is GameStop and its shares. We're going to explain to you exactly what's going on.
All right, guys. As Riven was saying, like this is one of the biggest news that came out this week. Obviously, this is not really so much video game related. It is a retail that sells video games, but it was such a big news this week that we had to cover it.
Okay, so anyone who doesn't know, GameStop is like a brick and mortars video game retailer, which haven't really been doing that well nowadays, especially in the age of COVID. And
Yeah, anything, if anything, they actually been a failing company during all this because even during the sale of like the Xbox Series X and PS5, they haven't really done well in terms of building up their shares. Um, like a lot of people just kind of made them a meme, and in terms of like, oh, they're gonna go down the way of like Blockbuster or Toys R Us.
yeah. Well, like in general, most brick and mortar stores are sort of fading out because everything has just become digital now, right?
Exactly.
Everyone downloads digitally or orders from Amazon, and no one actually goes to GameStop anymore. So in the last couple of years, they've been taking a hit. Recently, GameStop has slowly been moving more towards like less about video games and more towards other stuff like figures and
Pop figurines or stuff like that.
yeah, and T-shirts and stuff like that.
Hmm.
So I mean, at one point their stocks were like, I think like last year they were around like $4 a share, right?
According to the history here, yeah, like about $3-4 around there. It was kind of hovering around there for a while. During the tail end of the year, they had some positive news. That kind of spiked it up to like the teens because they're going to be working on like a partnership with Microsoft, for example, on a multi-year contract. So there's some positive news came out in the tail end of 2020.
Yeah. So with their prices lowered, right, and the company slowly dying, a couple of hedge fund investors, I guess they decided to take an opportunity to short the stocks. Now, before we continue, we have to. It's important that we explain what shorting is in the context of buying and selling stocks.
When you actually buy a stock, you typically call a share. Like if you want to buy at a certain price, in hopes that the value of that goes up. So that's in a way how you make a profit. But there's also another way you can make money through it, and that's what's called shorting. So basically, you're betting against the company. So hypothetically,
Yeah,
if you were
you're
to
betting
buy,
on the company to fail, pretty much is what you're saying.
pretty much, yes. So in a way, how it works is, let's say that Riven owns a stock or like a company. I would borrow money from him, whether it be $10, whatever the case is, in hopes that the value of that stock goes down. So that way I can sell it to someone else at a cheaper rate. And then and then when I return that money back to you, because obviously I borrowed it from you, any difference from that turns into profit.
This whole thing started from a subreddit called Wall Street Bets. A couple of users noticed that these hedge fund investors were shorting GameStop stocks. So what some of them did was they started buying the shares in order to artificially increase the price of the stocks, right?
Hmm.
And eventually, it sort of snowballed when more and more people started buying the shares, thus continuing to increase the prices. And I
Yeah,
believe it went from like say $20 a share, I think from the beginning of the year to now I think it's worth 300 or
yes.
so.
At the current state, about 300. At the end of I think yesterday, it stopped around $325 per
Right.
share. We short a stock. If the value of the stock goes up, it means that you owe money in terms of like the money that you borrowed from, or the shares that you borrowed from the original purchase you made from it. So when you actually buy a share in hopes that it goes up, if the stock ever goes down, you only end up losing how much you put into it. However, if you short a stock, like it's almost infinite of how much you could potentially lose. Basically, as a stock keeps going and climbing up, you end up owing more and more and more as the value increases, which turns into a short squeeze of trying to buy back your position. And when you buy back your position, you end up also increasing the value of those shares as well. So it's like an infinite like glitch in a way, like if you want to call it that, like an infinite loop of just continuing losses. And in that regard, they end up losing. I want to say it was like $20 billion at the very end of like pretty much yesterday during market end.
Yeah, and they're going to continue to lose, like what, around a couple of billion or so every single day, as long as the prices keep steady, right?
Climbing.
Here we go. April 2020, when the quarantine started, right? They were worth 3.25 US dollars. Throughout the year, they pretty much stayed around the same level. There wasn't any significant increases or decrease. So throughout most of 2020, they were around $4, $5 a share. And then sometime at the last quarter of 2020, their prices started going up to $10. I'm guessing that's because of the holiday season, right?
That, and also their I want to say it's linked to their partnership with Microsoft as well. They had a multi-year partnership.
Right. Yeah. So which
they had a string of positive news of like slowly making some changes in their structure.
Yeah.
But for the most part, nothing really too significant.
At the beginning of January, they were worth around like $17, $18. Slowly started going up around January 12th. And around January 25th, they were worth $76.
Yeah.
And I think this is when the whole thing started taking off, when people started buying, mass buying the stocks, right?
Correct.
So January 26th, look at the jump. They went from $76 to $147.98.
That's huge.
Yeah. And then from there, from January 26th to January 27th,
it doubled.
Yeah, it went from 147 to 347. There was like a small dip in January 28th.
Which we can explain later.
We'll explain later. Yeah. But currently, right now, as of the recording of this video, it is January 30, Saturday. It's currently holding at 325.
In a way, these hedge funds, or I wouldn't say that they like specifically are doing it, but for the most part, like companies like these have been doing this for years, shorting companies and making money off of other companies' failures. So in a way, it's almost like a battle with the small investors to the bigger investors, the hedge funds, and it turned into almost a political thing.
So the whole concept of shorting, it's sort of like a high risk, high reward thing. These hedge fund investors, they didn't have to short these stocks. Like they just got greedy. The people in the Wall Street Bets subreddit, they caught on to it, and it eventually made them pay for their greediness. So they started, this whole movement to try to increase the prices of GameStop shares. And now it's become like an international movement with like everyone from all over the world are buying and holding onto the shares in order to increase its prices. It's become a war between the 99%, like regular investors like us versus the top
1%,
the 1%, like the billionaire investors.
Before this spike actually came up, they didn't really take Wall Street Bets seriously. They're like a 4chan. They're a meme. They shouldn't be taken seriously. But when this actually succeeded and happened, they were like, "Oh crap, maybe we should take them seriously." So stuff like this probably won't happen again. I'm sure there'll be some kind of regulation in the future to not short beyond 100% in the future. Through whatever means.
Yeah, I mean that's what's interesting about this whole situation. It's we've never seen it before, right? It's never happened before. We don't
Hmm.
even know what's gonna happen. Like how do we don't know what kind of effect it's gonna have on the market for like in the long term. So
Hmm.
we're still sort of like learning. This whole thing isn't without a couple of controversy, and we're gonna explain what happened with this dip on January 28th. Now, Robinhood is like uh, the most popular app for buying and selling stocks, right? Robinhood on January 28th, they completely restricted the buying and selling of GameStop stocks.
Like in terms of the I guess policy or philosophy that Robinhood had when they first initially launched, they were pretty much the app to go to like we thought anyway at the time that they were for the people by the people type mentality, and the fact that they you know prevented people from actually buying shares, it showed their true colors in that regard, and a lot of people were pissed.
Here's Robinhood's official site. We're on a mission to democratize finance for all. At Robinhood, we believe that the financial system should be built to work for everyone. That's why we create products that let you start investing at your own pace on your own terms.
And that's exactly what they didn't do on Thursday.
Yeah.
Like basically, for those who have Robinhood, they're given a like an important message from Robinhood, because after the whole controversy of like preventing people from stopping buying it, they went into this thing where you can actually limit buy shares on Friday, and it reads here basically, you can now make a limited whole share buys of the security that were temporarily positioned closing only. And in a way, that kind of also goes against what they were doing too, because Robin has this cool little feature, where at least it did for the most part, where you can you can buy shares through dollar value. So if you don't have the full $300, but you have $100, you can buy $100, and they'll kind of split that into like
Yeah.
like a percentage, like a
Yeah.
small like decimal,
Fractions. Yeah.
or
Fractions.
yeah, like basically a fractional share of that company versus a full share. And that in a way that also kind of like I feel goes against the people as well, because not a lot of people have 300 plus dollars to buy a whole share of a company versus fractional share, and that also kind of fueled more fire into the flame.
They did reopen trading, but in a limited manner. On Friday, they stated that they were allowing people who have 0 shares to purchase 5 shares, but eventually they dropped it to 2 shares, and then eventually, like they dropped it to 1 share, all on the same day.
This is kind of interesting. The note that I wanted to point out is I believe 56% of the shares that are bought from GameStop were from Robinhood. So other companies besides Robinhood was Ameritrade, obviously Webull. There's Public, M1 Finance, Free Trade. Those are just some of the ones that I can think of top of my head. And what's even crazier is not just GameStop, but also other like companies too, like AMC, Bed Bath & Beyond, Naked, um,
Yeah, AMC, BlackBerry, I think Nokia.
BlackBerry.
Yeah,
Hmm.
BlackBerry, Bed Bath and Beyond, Cause. Yeah, so these are other shares that are being shorted, and a lot of people are also buying their stocks in order to increase their prices.
What we found fascinating about Robinhood is they are backed up by a company that also somehow backed up the hedge funds.
The hedge funds that are being affected right now, well, they're associated with Robinhood in some way, and they're the
Yes,
ones.
Citadel.
Yeah, and they're the ones that asked Robinhood to restrict the trading.
So basically, Robinhood is under a company known as Citadel, as well as Point72, which they invested 2.75 billion into Melville Capital Management. So not only did they invest all that, but they also end up losing all that as well when the stocks continue to climb. And so a lot of people are pointing that Robinhood might be doing a market manipulation on basically artificially stopping people from buying it and only allowing them to sell their positions. You actually don't buy or sell shares from Robinhood. They actually go to a third party, which is Citadel. So like when a trade happens, they basically buy those shares from Robinhood. Robinhood then goes into a company called Citadel that actually buys it for you to get it to transfer it back into Robinhood to your account. So when they were losing that money, basically Citadel had to like borrow that money for somewhere else to pay the return. So like it gets kind of complicated in that regard. But for the most part, yeah, like the stuff you buy from Robinhood is not technically from Robinhood. You're actually buying it through a third party, Citadel.
Yeah. So in summary, Robinhood, Citadel, and Melvin Capital are all like
linked.
Yeah, linked together. Because of Robinhood's attempt at manipulating the markets, they were hit with 2 lawsuits. So according to this article here, 2 Robinhood users filed separate lawsuits against the brokerage app Thursday after it and other apps restricted trading of certain securities. The first lawsuit filed in the Southern District Court of New York alleges that Robinhood purposefully, willingly, and knowingly restricted certain security transactions, including GameStop. The other, filed in the Northern District Court of Illinois, alleges that the app manipulated its platform. Yeah, so there's this 9-page document that was released that's detailing the lawsuit against Robinhood. So let's take a look at the first page real quick. Class action complaint. Nature of the actions. Robinhood is an online brokerage firm. Robinhood purposefully, willingly, knowingly removed the stock GME from its trading platform in the midst of unprecedented stock rise, thereby depriving retail investors of the ability to invest in an open market and manipulating the open market. We're gonna have the link down below if you guys want to check it out, but it's kind of like lengthy and wordy, so we're not gonna cover all of it here. So this lawsuit only started a couple of days ago. It's still an ongoing situation. We don't have any further updates on it, but once some new updates pop up, we'll definitely try to cover it. But for now, this is the current situation.
People who have never invested are learning a lot more about investing than they probably would have thought. Like, what is shorting and stuff like that. So this definitely brings a lot of attention to these hedge funds that almost take advantage of the systems, and in a way, it kind of shows that the true colors of some companies, like not really backing up the smaller investors, and that's unfortunate.
A lot of people are learning about stocks now. There's going to be more retail investors after this entire thing. Unless you've already bought the shares like really, really cheap, I guess this is like a financial benefit for you. And you were also implying that it's probably not a smart investment to buy shares now because they're like $300 now. But
yeah, they're super expensive.
Really, what the whole point of this entire thing is, it's really not about the money. It's like a global movement to sort of stick it to these like greedy investors. Every single day they're bleeding money, and none of this is illegal. It's like the market is being openly manipulated, but it's legal. But and
bigger companies have been doing that for years.
Exactly.
So it's not like it's not been done before.
These billionaire hedge fund investors are complaining about it. They've been manipulating the markets from behind the scenes, and now that like retail investors like us, the normal people, are like manipulating it, now they're complaining about it. So it's gotten a lot of support from all these other politicians, especially like politicians from the left and from the right. It's AOC tweeted about it. She said that she what Robinhood did was wrong. Ted Cruz, who's a Republican, was also agreeing with her.
In agreement.
And also Elon Musk as well was supporting this cause. So
Ben Shapiro, I believe too, right?
Yeah, Ben Shapiro as well. It's the whole thing is funny in the sense that people have been more united than they've ever been, and it's like against like these like greedy billionaire hedge fund investors, and it's almost like a beautiful thing. Like last year, we've been so divided in terms of politics, right? But now it's nice to see that we can come together against like a common enemy. Everyone in the Wall Street Bets subreddit, they're encouraging people to hold. They're not selling the shares. If they sell the shares, they'd be set for life, but they're not. The longer we hold and keep the price of GameStop, steady, the more money the greedy hedge fund investors will lose every day. This whole thing is we don't like it's never happened before. This is like I feel like this is like a once in a lifetime thing, and
Yeah.
they're definitely gonna set restrictions and regulations after this. We're probably never gonna see anything like this ever again, though. So this is what makes this story pretty interesting. Pretty much the mentality in the subreddit is they don't care about losing the money. I have a feeling a lot of people are still gonna hold on to their stocks, for a very long time.
It's kind of like a wait and see type of like cat and mouse thing between the billionaires versus the, I guess, the Reddit community or the smaller investors.
Yeah.
So it's just one of those like things like, will GameStop hold for $300 for the rest of the year? I don't know. Like we can just set predictions out there, and but yeah, it's just very fascinating to me.
Yeah, and I don't know if we mentioned this earlier, but me and Talos aren't like financial experts, right? Well, like I'm, like I'm, I want to say I'm just like a gambler. Like I'll throw some money into stocks here and there, but I'm not exactly like savvy. I'm not like
Yeah, even though even though like I have a bit more experience than Riven, I'm also still not a financial advisor. I'm definitely not a multi-millionaire or billionaire from the stock market, so I definitely don't have my hands in that pot that much. But I do invest for the long term, and that's kind of like what I see is GameStop a good long term investment? Personally, I would kind of stay away from it because it is so volatile. But for someone who just wants to be part of the movement, you're more welcome to join it. But so if you think about keeping this as a retirement or something that you would sell in the future, stuff like that, long term, I just don't see it unless the actual company itself, GameStop, does something differently, and hopefully they use some of that extra money they got for fixing up their system and whatnot. I don't know exactly what GameStop is going to do with all that excess money, but
Yeah,
I'm actually kind of curious to see what they feel about all this.
That's the funny thing about GameStop, though, right? They're sort of just like a pawn in this game. The retail investors are waging a war with the hedge fund investors, and GameStop is just like the battlefield. But they sort of kept their distance throughout this whole thing. They're just like I guess operating as usual, right? As normal. Hopefully, they use some of this money to maybe restructure their business model. It's definitely not paying off for them, as evident by they were slowly dying before this whole thing started.
We'll just have to wait and see. Will Melvin Capital get a bailout? Will GameStop do something with that money? It's just kind of up in the air right now. But I think as soon as we get some more information on it, we'll definitely keep you guys posted. But this is definitely, like Riven said, once in a lifetime experience. So whether you start from the very beginning, you just came at the very tail end, this is all just unprecedented.
Thank you guys so much for watching. If you enjoyed our content, you can support us by liking and subscribing. And feel free to leave a comment down below. See you guys in the next video.